Hey, hi Ravi.
Hi.
So, welcome back to all the participants to this forum on the session on the digitalization and future outlook of insurance industries. And we have the very eminent panelist over here. I request you to put your mic on mute, please. All Bilal, Akshay and Saurabh and Ravi. So, the friends, we have the eminent panelists over here. I just wanted to brief the highlight of the who the panelists are. So, coming from the Ravi ji, Ravi Walicha is also having a 20 years of experience in the professional banking. So he is the banker. Currently, he is the CEO of the India Factoring and Financing Limited, which is called FIM Bank. So we'll also ask him. We never heard the FIM. What is the FIM Bank? So for the audience. So he also conducted many programs, seminars, and number of sessions for the MBA students in various business schools. So I'll welcome him, Ravi Valichaji, to this particular forum. Next, we have Bilal. So he's also having a 15 years of experience in the insurance industries, general insurance industries. He's currently working in the Horton and he's working in the trade credit risk management and insurance broking and client servicing department. His main focus areas are in the credit insurance and settlement of the claims. We have Akshay Bharadwaj. Akshay ji is also having a trade credit insurance, currently working in the Mars India Insurance Broker Limited, and having practice of trade credit, political risk, structured finance, and so on. He's working from last 8 years into this particular insurance, Mars India. Previously to that, he was in the ICICI Lombard, having more than 8 or 10 years experience. Then before that, in the various other companies. So his large experience will benefit to this particular session. We have, our own fraternity member, a chartered accountant, my colleague, who is also a company secretary, Saurabh Sohani. He's also having diverse area. He's a CFO, and then now trading side, like the insurance side, number of industries in the technological side. So various segments he's having the experience. One of the main part is his entrepreneurial skills, which always bringing all their to their employer into the new business generation. So he always be in the new generation of the business, new ideas, new technology, new funding, new merger acquisitions. Always he believes that new things to be happen, and this is why he is in the one of the panelists to take about new technology to talk about how the insurance industries can shape in the new technology. So welcome back all the participants to this particular forum. This is the insurance segment. We'll talk about the various insurance futures aspects, how the insurance industry is going to look like, and what is the bottlenecks of the insurance. I feel it, if we talk about when I passed in CA Chartered Accountancy in 97, we used to see it only 4 or 5 insurance company, all government, New India General Insurance, Oriental Insurance, LIC, or these are the 5, or GIC, 5 insurances. But over a decade, 2 decades, the time has gone change, complete change. Lot of insurance sectors in the insurance segment, we can say about 70-80 companies had emerges in the insurance market in India. And more such company are bringing. I know that we never heard any kind of insurance on the whether it's a weather risk insurance or director liability insurance or partner CA liability insurance or any credit insurance. So all kind of things which you work in the trade, it can be insured. Any whether you are your personal life is also can insured. So any material things also in the process of things can be insured, and that is the reason this is the important aspects of the commodity trade. Without insurance, you cannot have a trade. For any trade, for any, whether it's import and export or anything, you need to insure, because you don't know what the future liability is going to come in, and you cannot believe it. You have to be taking the insurance. And as per regulatory requirement, whether it's making a payment in the LC, the compulsory requirement of the banks, you have to insure your cargo or your trade, unless and until they will not release the payment or LC issuing the trade. So entire things about the insurance is there, and that is why this segment is more important aspect about the trade. And we have the eminent panelists. So I'll take up something to the Saurabh. Saurabh, we are talking about the complete digitalization of the insurance. I know that insurance continuously evolving, and which we have seen the lot of blockchain technological advantage in the entire insurance segments. I'm not talking about any trade credit. I'm talking about entire in general, because we have seen a lot of technological things we have seen. What do you think about the technological advancement in the insurance sector? Over to Saurabh.
I think you would have seen that website websites are having more and more share in the insurance premium market. That is one, and even the technology is now so good that you can automate, or you can at least make ready some processes like commercial underwriting and even claims underwriting in insurance to an extent, by automating, or let's say by encouraging clients to fill in a certain form or in a certain standard the information. So the objective part still can be with the commercial underwriter or claims underwriter, but let's say 70% of the groundwork can be done by technology itself. So this is the change,
Right.
I think,
So
in the last 10
what is the
years.
benefit?
Yes.
What the benefit will bring to the insurance industries by having a technological advancement?
So the benefits are huge. Like, I think the earlier we used to have time lag between approving a commercial proposal, let's say between Indian insurer and its foreign reinsurance partner. I think this time lag can be reduced. That is the benefit I can see. Even in claims underwriting, I think if things are online, uh, an office, let's say an executive in India can have access to a same screen, which let's say insurance partner like Bajaj Allianz may have, and then the reinsurance partner also can have the access to the same screen to see a claim. This is even possible for commercial underwriting. So this is, I think, in that sense, the benefits will be to reduce the time lag, to reduce the time response to client. And the second is digital marketing is again is a huge has a huge potential by introducing your product and getting everything standardized. So even customer knows that, if his turnover is so much, and he belongs to certain industry, his client is so much. Even risk underwriting can be automated. So uh, the process can be much faster, much simpler, much more predictable, and therefore it has a potential to grow
So,
exponentially.
right, I think very rightly said that potential efficiency is the
So from our side, and I think when I was trying to convince my company in Pune to have the insurance cover, they really highly appreciated they were typical Indian promoters in out of Pune, although very smart guys. So they went into ECGC website and saw, from the website itself how commercial underwriting is done, how claims underwriting is done, and what information has to be put in. And they were quite happy to understand all that. This kind of information was not available, let's say, I think 10 years ago.
Right.
That helps
Very right,
also.
very right. So if he's bringing the technology, bringing the efficiency in the system and claim process and everything. No, I think in the trade, we believe that trade credit insurance also is more important. So I'll take to the Akshay Bajaj. So he's leading this particular transaction. So I wanted to know the India perspective as well as the global perspective in the trade credit insurance. Okay, can you just highlight the trade credit aspects?
How technology has helped?
No, not technology. I'm talking about the
Uh,
trade credit. Basically, the trade credit.
uh, okay, in terms of how it has been helping trade.
Yes, it's helping that in India. What is the context, and as well as in the globally, what are the global
So
scenario
it's
and
a
in India?
yeah, global scenario in terms of supporting trade. What I understand, trade credit insurance is the real backbone on which trade stands today. So if you talk about 100 rupee insurance being bought globally, at least 50 to 55% is bought by financial institutes, including banks, to support trade and both non-trade business as well. Uh, India, the story of trade started in 2002 till 2002 to 2010. There was a free run. After that, IITA stopped it. Unfortunately, they stopped. But I believe the light is just at the end of the tunnel. We have after a 10-year-old long battle where it would be able to support trade finance. Probably by November, probably Bilal would be aware, Ravi would be aware of this. Ravi has even been to IITA, done a representation on why it should be allowed. So what I believe is that this is going to transform trade finance in terms of how trade credit insurance is going to do. They will help our globally how they help.
So my
Two, three things which
Akshay,
I'll yeah,
my point is that in India, like
yeah,
there is a population of 130 crore population. So in if we talk about hardly people are taking the life insurance or general insurance. So like
correct,
in the
correct.
two wheelers are there. They're using a very hardly.
Third party
So
only.
what about the
Correct.
trade? Are there all the trades are 100% secured, or the trade
No,
having
no,
a
no,
insurance, or
no,
people
no,
are having a trade insurance?
no,
So what is the importance? You should
no.
highlight to the.
So I'll tell you, yeah, I'll tell you two things why trade credit insurance is not so popular in India, and then I'll maybe we can have a discussion on how it can help. Fundamentally, the problem is with respect to regulation, where we decide on various commercial aspects, where there's a lot of intervention. What should be the indemnity percentage? What should be the who can buy it? How he should buy it, what type of product to be filed. Rather, it should be the decision of the market forces, which is missing. Probably that is restricting people to utilize trade credit insurance in its fullest form. I think that is where the disconnect is. Second important aspect is with respect to our way of doing business. While if you look at Japanese companies or German companies who do not carry balance sheet risk and they would want to have insurance. And just to give you a perspective, one of my Japanese clients have taken a cover on default of uh, one of the one of the biggest PSUs. Everybody knows that it is not going to go down, but if they have a balance sheet risk, they have to cover it. So that philosophy has to develop, and I think Dhiraj, this is a very important point which you have raised. I think that awareness of using insurance as a critical risk management tool has to be inculcated within. The way we do business, we still believe that okay, somebody has given a confirmation, I will, or a verbal confirmation or a written confirmation, I'll go with that. What people do not realize is that many a times things befall without a mistake of your buyer. It could be a dominoes effect, which we are seeing currently due to COVID. some things which are beyond it. So all in all, insurance will tremendously change the way trade finance is done in India. If you talk about penetration, it is very small. It is very small.
So,
It has a very long way to go.
yes, I think I'll go back to the Bilal. Bilal, you also in the trade credit market. You also doing a lot of trade credit. So, what you feel about the India market as well as the global market in trade credit? Yeah, Bilal.
See, in India, everyone knows that insurance is bought out of compulsion, right? You have to force people to buy it, right? When you are taking a loan, right, people do not understand, yeah, okay, it's my lifetime, I should get it insured. But when the bank forces them to buy an insurance, life insurance, because it is one you who is the earning member who is going to return the loan, right? You need to insure your life. They buy it out of compulsion, right? So when it comes to the trade credit insurance, right? In my 15 years of work ex, I have met a lot of decision makers, right? Be it the proprietor of the firm or the partner of the firm or the CEO of the firm, right? When we make them understand that, boss, this credit insurance is going to safeguard your balance sheets, right? They do not understand it, right? This they say that, Bilal, insurance, we have bought the insurance for asset, right? We have bought the insurance for our fixed asset and these stocks, right? Raw material, but we know that we have an open account for sundry debtors, but we would not like to buy this trade credit, right? Because they have yet not faced any default, right? Or even if at all they have faced the default, that the non-payment from the buyer side, they say that, Bilal, it was one of a situation, right? But we hope that we will not get the default in next 2-3 years, right? So they are working on the hopes, right? But rather they do not understand, if at all there is a big buyer, right, and they have an exposure on that very buyer, if he goes buzz off, right, it is going to hit your complete balance sheet, right? So today, I still believe in the understanding of the trade credit insurance, right? The education amongst the people is still not there. They say that we are ready. See, once the expense is in the name of insurance, people would be ready to buy a fancy car, right, for 60 lakhs, right? The partner or the proprietor of the firm. But once we say that this is the cost is going to safeguard your balance sheet, they are not ready to give out that very money for the insurance, right? So still the mindset of the Indian promoters, right, it's still not changed. They still feel that insurance as an expense rather than insurance as a backup plan for their any losses, right? So the mindset has to still change, right? We hope that the kind of people Akshay and the other are there in the industry, and the reach which we are making to the people, and people are realizing from this very COVID, wherein the default or the delayed payments are happening, people are going to realize that this product is definitely going to be a one thing which is going to protect them against their losses, right? So I hope so,
So very
that
good
people understand
statement.
the importance of this product, right?
Very,
If I just,
very good
if I just,
statement. Very good statement. Where you this is insurance to your balance sheets. One of the best point, which is that you are making a insurance to your life, your accident, your everything. Now you have to insure your factory and everything. Now you can insure your balance sheet also. So this is why the trade credit is there. Now coming to the Ravi Balachaji,
there is
he's
a one point which I was
yes,
just want to
yes,
support what Bilal was saying, and he rightly said it. We recently did a webinar for our clients, and we had a poll question: how many of you believe that you will have a default from one of your clients? 97 respondents said that we expect a default. But this is actually shocking when you are having a forum of 300 people. 97 people are saying that we expect a default, not delay, default. And I think this
default.
COVID,
So
this COVID has
I'll
actually, yes. Please go ahead.
Yes, I think you're right. Coming before coming back to the Ravi ji, now with the same connecting questions are there. So when the 70% or 90% so people are having a default, why there's no awareness on the insurance company side or broking side? You people are there, like this is a compulsory. These are a must. So why the information is lacking?
No, so that thing will come because like what Bilal suggested and even Saurabh mentioned, insurance out of fear, or if they have experienced something. Now, the beauty is that after World War II, I think this is the first time that the whole world is in the same boat. All 200 countries have been downgraded this year. And this is actually shocking. So there are going to be defaults. Everybody will face defaults. So earlier, when we used to go in, people used to say that we don't have loss. Why should I buy it? Or the cost of premium is more than what the loss I have faced. Okay, but this is one period where everybody has got losses. Some have got smaller, some have got larger, and this situation can occur again. Biological warfare is something which we are going to live with, correct? And these sudden shocks can come in. So you have to be prepared. And I think Bilal will agree with it that we have seen a sudden surge in demand for credit insurance from various industries which never used to buy insurance. They used to tell us that your credit insurance company's rating is say S&P A, my buyer's rating is S&P A plus, so why should I buy insurance from you? And those S&P A plus have gone down. Today, as you are asking about global perspective, all three top insurance companies, trade credit insurance, which are controlling almost 82% of global market, all are running at 100% plus loss ratio, booked loss ratio. I'm not talking about provisions, booked loss ratio. And by 21, because what is happening globally, all countries have stopped insolvencies to happen. 21 will see the floodgates open, and you will have more worse situation because we don't have any clue how many zombies are running around. Those companies which were about to go bust, and
So
they are not yet filed. They have a bankruptcy. They will file in 21.
my question to Bilal, being he's also for the settlement of claim. Generally, the insurance company working on the probability. Probability is main key factors for the insurance company. And 1 year itself, 21, they are flooded going to be there. How the insurance company going to survive? How they whether they will commit their insurance claim part, how the insurance, which company we have to choose it, whether they will honor the claim. Bilal.
Rightly said, Dheeraj, that there is a flood of claim which has come up, right? There is a lot of delayed payments which are happening, right? And trade credit gives you the comfort that if at all the payment has not come in 6 months, right, we will be making good all that loss which has happened to you in the very 7th month itself, right? But the kind of claims which have cropped up, the number of claim and the frequency which has increased, right? And the manpower which the insurance companies are having, right, they are being flooded, right? I'm coming up from my personal experience where I visited an insurance company claims manager, and on her desk, I could find that she is covered. I could not see her face because there were so many files kept on her table, right? And she was saying that, Bilal, I have to settle out all these claims. But can you imagine a person, right, who has the approving authority, right, is flooded with 100 of the files, right? And she has to read a lot of in between the lines, right? Whether the debt was outstanding for how many days. At least I'll say that for approving one of the files, she has to take 10 days, right? So if at all it's 100 files, she has to take 3 years to clear those files, right? So once you raise the very first question that how is the technology going to happen, how is they going to help the insurance industry? So there the technology needs to come in, right? That certain few things needs to be done by the technology part, right? And the final approval needs to come on her desktop, and she needs to just approve it. Otherwise, you can understand for these 100 files, if at all she is going to take 1,000 days, it means 3 years, and we have to all those 100 files have to be cleared in the very 7th month. So it's still that the insurance company is going to definitely pay the claims, right? But the timeline which we have agreed for, right, in the 7th month, I don't think it's going to be completed, right? So the delay is going to happen. The frustration is going to come from the client side, and the insurance company definitely is going to lose the confidence of the people, right? Even they cannot hire the people in this very claim because this is a very expertise business which they are doing, right? Anyone from any other vertical cannot be pulled in to settle out this very claim. So, right, definitely the claim is going to be settled, but on a delayed part, right? This is what I expect.
Really,
And experience.
suppose I will go to the Ravi ji because of your product insurance. He's giving a finance, and in your payment has got again claim is got delay. The entire business got affected, and those are in the finance working. The entire their business is going to hamper. So how much delay can be there, and which insurance company we need to choose in, who can honor it?
So this question is to me or to Mr. Ravi?
Yes. Then I'll come back to Ravi. I'm
Okay.
asking you.
So see, yeah, right. So there are currently 7 reinsurers in India, right, who are the multinational companies, and one is the ECGC, right? I still will say that the reinsurers are doing, these private reinsurers are doing a good job on their part, right? But in India, because of the IRDA guidelines, right, who is the governing body, right, they have to be fronted through the Indian companies. They have to partner it with the Indian companies, right? And the certain approvals has to be there from the Indian partners rather than from these private reinsurers, right? So I find that the current combination of Atradius and HDFC Ergo, wherein the reinsurer has got the complete hands, right, on the claims, right, I would choose in Atradius, right, with the partner from HDFC Ergo, wherein they would settle the claim in much lesser time than what actually the others are doing it.
Okay. So
If I can add just one point on this.
my question to Akshay. Yeah. Uh, my question to you, suppose I'm a commodity trader. If I have to insure, how much it cost? Trade insurance, how much it cost?
So currently, I've been trying to answer from last 15 years, and I have never been able to guess it right. But it depends upon the size. But roughly estimate that whatever be your insurable turnover, it would be about 0.10% plus minus 40%, depending upon your sector, history, losses, etc. Correct, Bilal? That's quite a range, huh? Quite a range.
You have been very kind to the customers, right?
Yeah, my advice to the entire trader is let's make a provision of 0.10 basic point to your business, and hedging. This is also part of the hedging cost. So take the count of 0.10 paisa in your business so that you can ensure your trade for the future clarity. Now coming back to the Raviji. So I think Raviji, for the chartered accountant, you are most valuable person. Be chartered accountant always guide for the commodity working capital aspects, and you are structuring the entire commodity from the unstructured to structured way. You are giving a factoring the data. Can you just give the highlight India perspective? What is the market? How you are dealing it? What are a current scenario is, and what the global is? Over to Raviji.
Ravi boss, you are on mute. You need to unmute your mic.
Okay, can you hear me now?
Yeah, very much.
Yeah.
Okay. So from India, I would say the trade market is roughly around about $500 billion. What we see from both merchandise as well as service exports put together, of which, as per my estimates, around $70 billion worth of merchandise export is on open account basis. That means that rest all are under documentary credit under LC, which might be secured as per the banks who are underwriting the risk on the buyers. The risk on this 70 billion is something which the shipments are happening on open account basis. And as we know, the world is moving from LCs to open account gradually. This 70 billion is expected to grow continuously, and especially in times like today's, where the buyers and suppliers both need to work cohesively. That's the future of Indian markets. That not only Indian markets, the global trade. It is expected that 70 billion, whatever exports will happen in the future, that is going to be non-LC based, or it is going to be open account based. So, how do you secure your transaction? Is something which every seller is still concerned about, because he's not getting an LC. The only other way of doing it is through credit insurance. So unfortunately, in India, the credit insurance market is, I would say, it's in a nascent stage. It's still evolving, and as my co-panelists have already highlighted, that it's more of a force than forced by the bankers or forced by the financial institutions to take the credit insurance from ECGC or the like. They are taking it. Otherwise, it's not a choice. Now, just to give you a perspective why a credit insurance is important. Across the world, in a situation like today, no one foresees a bankruptcy risk or a political risk. But then these are happening every year, not even before the COVID pandemic, the bankruptcies were there on the rise. The trade elongation has been on the rise, and across the world, we are seeing the tightening of the economic situation. Just to give you a perspective, another perspective, very close examples I'll give you is Sears. I don't know how many of you know in the retail segment, Sears Incorporation in US, one of the biggest retail chain, as big as you can say Reliance Mart or Aditya Birla Fashions or any of those retail chains or West Sides or the likes of those, but spanning into billions of dollars. Suddenly, one fine day, they go bankrupt. Similarly, this year itself, we had an experience. JC Penney is another one, which is a huge retail chain in US, across US, maybe 300 to 400 shops, retail shops across US. They went bankrupt. So no one knows that who would go bankrupt. So it's almost essential that the exporters or any sellers in India do take the credit insurance and take it seriously, not by force but by choice, because it's just like any other risk mitigation tool which the sellers need to underwrite to take something. They have evolved to take something like a forex hedge, which they take, right? So it's as common as that practice that you take these other risk mitigation tools which enable you to broaden your horizon, increase your turnover. Now, coming to the perspective, I would just correlate to my product, which is the export factoring product. How do you do it? When you are taking credit, a working capital credit from a bank, it's always on a with recourse basis. The banks ask you to take insurance, and they offer you a pre-shipment and a post-shipment credit on that basis. And it also reflects as a loans and advances on your balance sheet. In a factoring, especially backed by a credit insurance, the factors or the banks who are able to offer factoring are able to provide a non-recourse factoring. Now, how does it benefit? So you're getting working capital finance, you're getting working capital finance from bank as well. Banks do not collect for you. The factoring companies do collections for you. The bank is not providing you a credit insurance. They ask you to take an ECGC cover. In factoring, the factoring companies underwriting the buyer risk coverage through whatever network, either through credit insurance or any other arrangement. The most important aspect of this product is that because of the without recourse element, you are able to make your balance sheet lean. That means what it's factoring is essentially you are selling off your receivables, and when it comes with a credit insurance, you can just remove it from your balance sheet, on the day of funding. That makes your balance sheet effective, more lean, leverage is gone, your ratios improve, and whatever improvement happens, it can help you in getting better ratings from the credit rating agencies, and also to be attractive for the banks where you want to do an expansion or increase your turnover with your seller, with your buyers as well. The other important aspect, you can use this as a turnover increasing mechanism, because as I said, the world is moving towards open account. So why not, instead of buyer asking, why not the sellers start offering this product, that okay, we are able to offer you an elongated period, but we would want so and so support. You get better terms, negotiation comes with your buyers as well. So in essence, a credit insurance is not just a risk mitigation tool. I say it is a more credit enhancing tool as
Very Ravi, right, that there are customers who are want to increase their turnover, right? They can come to the credit insurance companies, right, and actually get the coverage on those very buyers whom they don't even know it, right? Because they are present in India, right, and they want to sell it someone, let's say in UK or any far off country, right, and they do not know it, right? So we can help them out in getting a cover on those very buyers with the amount even confirming that you can take an exposure of this much cover on this very buyer. And their balance sheet, as he rightly said, can become very lean, right? And the factoring companies are very much there to support you in terms of giving you the upfront financing on that very invoices. So thank you, and I hope people understand this very product, right? That we are there to help them out.
absolutely. Dheeraj, you're on mute.
Dheeraj, you are on mute.
Yeah, sure. So I want to have one, question to you guys, please. Like suppose Ravi ji is talking about data factoring and utilizing into the more on the credit part. And it's not a risk mitigation. It's more on the credit management. So it's a more on credit management. People can give a longevity of credit period to their customer. Okay, let's have you utilize. Very nicely you presented, sir. Now my question is to that: is in India is allowable individual invoice factoring is allowed? So suppose if I'm a exporter, I did my one invoice, it's a $1 lakh, and my Akshay ji is in Singapore. Suppose if raise that, so can I have a trade insurance to the Akshay ji, and can have a finance on it?
Yeah, so a factoring line in India, how it operates is it's more of a running account limit. It's something similar to an overdraft or a CC account in the normal banking parlance. So it's a running limit which is provided, not a transaction by transaction. It's not a bill discounting where you want to factor in one transaction. It's not like an LC bill discounting type of structures where you have an LC or a bill you want to discount. It's a running. So most trade which happens, it's on the regular basis with the you have developed that sort of a vintage with the buyer. You have regular suppliers to say, for example, Marks and Spencers or G's of the world. So it's on the continuous basis which gets factored. So once the factor establishes a line on you, you can continue getting the bill discounting up to the limit which is being provided to you, which is backed by the credit insurance. So that's how the structure goes about.
Okay, so Akshay, I think you might be aware of that. Something is pending from last 10 years. You can highlight something. What is pending with the IDA, and what is the next expected? How we can have
Not
revolution in this
not
case?
just not just aware, sir. We have been living that horror. Okay, so 2010, yes, it was stopped. As I said, 50% plus buyers of trade credit insurance are the financial institutions, like what Ravi ji was explaining. Uh, Currently, financial institutes cannot buy trade credit insurance. The policy has to be a whole turnover policy. There is a relaxation given for single buyer cover, but it is shrouded with certain mysteries, so none of the insurers are very keen to provide a single buyer cover. Single invoicing is still a
I think we have lost his connection. Yeah. So,
some
yeah,
of the
yeah, please.
insurers, yeah, some of the insurer, one of the insurer have taken a sandbox approval for invoice based in for single invoicing, but which is linked to a platform like one you have. But it is still on a very elementary basis. And what IIDA is looking forward is that they want to have a feedback across a year or two in terms of how it develops. Globally, this is very popular. What I can assure you from IIDA perspective, as I'm privy to what is happening over there, that probably this month or next month the guidelines would be out, and we may take about a 6 month period for, or 3 to 6 month period for insurers to actually develop a product and start marketing. So, in my thought process, probably in next financial year, that is by April, would have an up and running product which you can basis underwriters' comfort, obviously.
So I think very right. There's a things are in the pipeline and going to be coming very soon with the IRA. Coming to the Ravi ji, is there any options structured like in Singapore or Hong Kong and Dubai? I've seen a lot of companies in India still providing a financing facilities on the single invoicing system. How they are doing it and what are the structure are?
So not a single invoicing. So like, even now we don't have credit insurance in India, but there are other ways of doing it. But other ways are limited ways which can be done. So like what we are operating today, we are the largest export factoring service provider in India today. We are providing through a other network, which is the correspondent banks relationship, which we have through a chain called Factors Chain International, FCI, which is a body of factoring associate. It's a factoring association for members across the world, and we are providing this service through them. But the availability of the credit insurance, it makes it 4 times more lucrative. And what we are currently able to provide through that correspondent network is only the export factoring. Imagine to your surprise that the credit insurance, once it is opened up, it will provide a similar incentive for domestic services also. That's the domestic non-recourse factoring, where you will be able to cover buyer risk coverage on the buyers in India itself. So how very common example I can take, Kingfisher going back. Now, there were numerous suppliers on Kingfisher, right? From the ticketing or material to weight, fuel, or any other things. If they could avail these sort of credit insurance through a factoring arrangement, or these could have been mitigated. So these are the things which will open up once this credit insurance for the financial institutions is made available. To your point that single invoicing, whether it can be done. See, a credit insurance does not permit you to provide a single invoice sort of a factoring as of today. Arrangement through the correspondence with a bilateral arrangement, it is possible to do a single or what we call a selective assignment, but that is strictly with support from the correspondent bankers with whom we tie up with, and their back-to-back arrangements with the credit insurance, whether they are able to support a selective assignments or not. So it's fairly limited, but yes, it is an option. But I would suggest the whole turnover is far better
As
for
a
anyone
factoring
to
company, do you financing themselves or you are connecting with the banks?
No. We are a registered non-bank finance company in India with a balance sheet in India as well, following all the regulations of RBI. And we are underwriting the risk, not just underwriting the risk, and also financing as well in the currency
So
of
how many
the
banks are
underlying trade.
connected, are financing such kind of deals in India?
Uh, See, there are some banks, very few banks who are offering this sort of a product. There are, I can say, 3 non-banks which are offering, and that's about it. So it's fairly limited in its operation right now. As with credit insurance, factoring is fairly nascent in India. The regulations around factoring came about in only 2011. So you can understand how much time it is only 9 years since the actual legal provisions came about in India. And definitely it takes time to build up that sort of. And the other issue is that, Indian customers have been relying on the legacy approach of the working capital banks, where we know that how to obtain the working capital, that is ODs and CCs and PCs and post-shipment credits. So that the legacy has to be broken, that we need to explore the alternate means. In fact, just to share with you, the globally, factoring is the bread and butter for most of the companies, that is SMEs and almost small companies in developed countries, rather
I
than
think
the
good,
banking
good answer.
banks.
So, like as you said that only 3, 4 banks are there in India. So, I think a lot of private banks or might be offering such services. So, do you see more banks going to become in that time to come, and will have the
See, it's not. In fact, you'd be surprised the private banks are not much active in this space. It is only a couple of foreign banks which are active in this space. There are only 8 members who are doing factoring, services in India. So definitely, you would have heard the recent regulations by the Lok Sabha and the Rajya Sabha. There was one element of factoring also in that. So yes, factoring is to grow. That's the way forward, which the regulators are also evolving. They want to move away, and in fact, the India's issue in the banking sector of the huge NPA levels or going into lakhs of crores is because of our reliance uh, on the plain working capital rather than the transaction bank facilities. So it's time. It's a matter of when, rather than if, when the banking facilities move on to
So
factoring
now
or
coming to
just
the
other
Saurabh,
facilities.
he's quite listening to each and every all that conversation. So Saurabh, you have listened Bilal and Akshay about the trade credit, and
Yeah.
you were being in Alarmar, you were also part of it, and heard the Ravi about the how the trade finance. So my point is that the how the fintech or insure tech company have the bridging the gap. So always I felt about there's a a lot of fintechs are there in the form of the insure tech. They can be pitching and can render the services
Yeah.
which are not offered by the factoring company or banks or any NBFC. What is the future for them? How the digitalizations, bringing together to combo to the consumer.
Uh, I think the technology is needed more, I think, on the risk underwriting side, where banks and insurance company would be on the same page uh, as far as the risk assessment of the uh, client is concerned, policyholder's client. I think that is the key there. I think this digitalization and the world coming together, maybe forming a database of all companies at one place. I think few data warehouse companies can emerge out of fin technology. Let's say at least for to begin with APAC region, people can have databases for all the companies, major companies which are operating in APAC region. That should help to underwrite easily for whether it is an Indian bank or a bank in an APAC region, and for the insurance company to decide. Because as a consumer of credit insurance, I think this was also a little bit bone of contention, from our side as the policyholder, that when ECGC told us for export business that so and so client of ours in US is not it's a risky client, and they would charge 1% for that. So it was highly contested. So and
Yes.
relied upon was not shared, I think. So there was a little bit, I think, let's say, a lack of transparency as far as the data on the ultimate client is concerned. If we have that with the help of these fintech companies, uh, I think in India we
No, I
have
think
now
you're
with
right.
MG
And
and NCA,
I think
most of centralized database we
I,
have. But if you can have it for APAC region,
right,
that would
right.
be really
So I
good.
think very rightly said that definitely technology can be part play in the various role in the insurance tech, being on the false claim and frauds. The frauds can be eliminated, and the claims. I think where the Bilal's take care about the claims and part where the technology can identify the people. If these are the claims are genuine or not genuine, or how it's happening, and that technology can bring this transactions being a genuine. So now coming back to
Yeah,
the Ravi being in the finance side, lot of companies, not factoring side, lot of NBFCs are playing a major role. So, do you feel they're going in short a kind of solution will be a threat to the factoring company, or will be a superior?
No, in fact, credit insurance is not a threat to the company. It's an enabler for the non-bank companies. Credit insurance is enables to better. As I said, it's a risk enhancer or a credit enhancer tool for the companies, and similarly for the non-banks, it helps them to mitigate. Just for assumption, you can understand that most of the non-banks or even banks, say typically an SME or an MSME customer, they always want an underlying collateral to finance against, right? They always want a security. Now, just to put in perspective that most of the MSMEs may not have any collateral to offer. So how do they get a credit? They have the strength, but they are supplying to the good buyers. They are supplying to market names which are much better, be it the retail chains or anybody else. But they're not able to get any sort of a limit. Now, how do you mitigate against, and how do you provide a credit element to them? When you have a credit insurance, it helps you to underwrite better because you are mitigating your risk against default from the SME or MSME whom you are not able to assess properly or take a call on because the collateral is not available. So you are taking a call through the risk mitigation tools using a credit insurance. So you're getting the same solution that you are able to provide a credit without requirement of a collateral. So I see it's more of a risk or credit enhancer rather than as a threat. In fact, it's a much more enabler for the financial institutions to take a call on these sort of customers. So if you were to really see that
Correct.
economy has to grow, the economic growth will come through this
No, rightly
particular
said. So
individual
now
as well.
I have
yeah.
a
Okay.
I have a point actually with respect to I got a drop, but Saurav was speaking about data sharing, like something like Sybil or something of that sort. But this is something which people have been talking about. Underwriters are sitting on a database of 7 to 8 million buyers at any point of time where they are assessing information. I believe we at Marsh have already started doing it. We have a platform called MI Credit where all the policyholders, buyers are on a real-time basis, the information is being collected. If a buyer is, if my client is insured with Atradius, I would know, and if they decline a limit, I would know what type of limit is available in Euler, available in Coface or other insurers. I think this is something which is happening with respect to information sharing. Very important. Second, your point was with respect to how technology enables a claim situation. See, in a pre-COVID era, COVID is a different scenario. It's a once in a lifetime type of an event. 60 to 70% of the claim, and Bilal will agree, were of disputes, where there were disputes. Okay, or what we call in our business language called protracted default claims, where the probability of dispute is very high. Now, what I look at is technologies like blockchain will ensure that there are no disputes with respect to documentation, with respect to processes, with respect to systems. So the claim processing would become tremendously easier for an underwriter or a claim professional, because he will get full information at one go, and the information captured under blockchain cannot be tampered with or altered with. So whatever is there before it goes to actually some claim authority, you know whether this claim is payable or not. I think that's a real good enabler on both sides in terms of claim, in terms of information sharing. Today, I think this MI credit, which we have a platform, and I believe Aon has also developed this platform is actually making a lot of impact in terms of our client servicing. So things are moving in the positive direction in terms of utilizing technology.
So now my question to the Ravi ji, how can we cover the 1.5 trillion dollar trade finance gap in the world? How we can fill this this gap?
No, I would talk more from an India point of view, because
Right. You said
the
$70
vision
billion
has been made.
targets in India is still unfinanced and uncovered. So please.
Yeah. So, the vision set by the government is that, for how to move from a 3 trillion economy to a 5 trillion economy. And we all know the importance of MSMEs in India. Okay. And we know the culture in India prevailing that the MSMEs and the SMEs do not have bargaining power with the larger corporates, and the credit gets pushed. Although the MSME Act is there, we know how all they get bypassed also, that the corporates do not make payments on the time. Now, what is it that a corporate is looking for? Yes, they are looking for an elongated payment because they need to manage their working capital also. And likewise, the SMEs and MSMEs are looking for early payment mechanism, which, as I just mentioned, that the banks or financial institutions are not able to provide credit to them because of collateral not being there. So here comes the gap filler, I would say, risk mitigant tool, which is a credit insurance. Now, everybody is manufacturing, all these MSMEs or SMEs, be it manufacturer or trader, they are selling something, right? When they are selling something, the receivable is created, and receivable being created, it provides an opportunity to provide finance to these guys. Unfortunately, today, the legacy approach of the Indian banking culture does not enable them to provide an unsecured finance beyond an extent. So they need to have a risk mitigant. And if we need to fill this sort of a gap, which we are talking about 70 billion to $500 billion exports only, but domestic is far bigger, credit insurance is a huge enabler. And that's what I cited, that the global world over, credit insurance backed by factoring backed by credit insurance is something which is there in the matured markets. In fact, most of the matured markets, factoring is the first line of working capital requirement, or sourcing from, be it UK, be it any European markets or the US markets. This is how the enabling can happen, and that's what is the future is all about.
Great. So I think it's very well said by all the people. We're just going to wind up. Before that, I wanted to take the final your call, which you wanted to address to the participant, starting with the Bilal. You want to say more things? Anything on the insurance part?
No, see, what Ravi, the factoring company really needs our help, right? And the government, the regulatory body needs to definitely understand that, as he said, that factoring has started in 2011 and it's at the nascent stage. So credit insurance and factoring will definitely go hand in hand, right? And as Akshay told, that we are hoping that the regulation should come back in next in couple of months, right? Definitely after this credit insurance being available for these non-banking finance companies, right? Definitely is going to be an enabler, right? That as you said that there is $70 billion, right, which is still unfinanced. Definitely with this enabler of credit insurance, these NBFCs or the banks are definitely going to look forward more aggressively in the financing with such kind of backup from the insurance company, where they do not have the recourse on the sellers, right? So yes, rightly said that this product also is at a very nascent stage, and we are looking forward for certain support from the government regulations, right? And once it is clear, right, we'll definitely be a help to these banks and NBFCs.
So now, Saurabh, we have talked about a lot of things. Do you think anything is missed out which is important to the participants?
Yeah, I think not many things we miss out. I think except as far as claims is concerned, a lot of people confuse credit insurance, and they feel that whether it is a dispute or not a dispute, the claim is still payable. I think this is what I personally encountered between 2000 to 2000, 2008 to 2010. See, credit insurance claim is when your client wants to pay you, accepts your debt, and is not able to pay you, then only you get the claim from the insurance company. The moment your client customer disputes your outstanding, you are not going to get a claim. But having said that, I think there are now, I think many insurance companies have come out with few caveats here, even accepting some type of disputes. But inherently, this is the principle of credit insurance, that you can't have a disputed claim. It has to be clearly documented claim. And obviously, financial technology and fintech companies can help in that, as Akshay has outlined, and we are also outlined. So this is what I think is required to be told.
Right. So now,
Because
coming to the Akshay,
many Indian promoter companies, they feel that and the tendency is basically we are paying this huge premium, and it's a cost to our company, and we are not getting return out of it. I think as CFOs of our companies, I think we have to guard promoters and the management against such behavior pattern. It's not,
right.
it's like a you should treat it like a medical insurance. You pay a premium and hope that nothing happens to you. You can't expect returns from insurance.
Right, right. So now, coming to the Akshay, do you want to say any final word to the
No,
audience?
I just want to assure all of our trader friends that once this IIT regulation is out, uh, do explore trade credit insurance. We are having clients running loss ratios of 400 to 500% on their policies. Recently, we had a $3 million claim which was paid by insurers. So, insurers are paying claims. Just ensure that you have the right insurance in place and wait for a few months. Once IITA allows everything, this is going to be a very big opportunity, not only in terms of insurance, but in terms of increasing your monetizing your trade. Just to give you a statistics, 80% of trade in Europe is insured either directly or by financial institutes. So if you're going to do trade, insurance is going to remain. Explore it and live with it. That's all from my side.
Yes. So now, can you just mute yourself, Akshay? Haya. So, Ravi ji, uh, anything from your side about the trade finance which are happening in the market in India? As you said, that's $70 billion. Volumes. Our market is there. How your company is growing? What you want to say to the audience? What they should do it? Most of the chartered accountants are here. So, any advice to the participants?
My only advice is that I'll cover two aspects. One is what you mentioned, the claims part of it. The claims part of it is, the obligation is on the seller also. On the claims part of it, as rightly mentioned, the disputes are out of it, but we need to see it that claims is the last point. And as regards the claim honoring part of it, I think we have experienced good part in the earlier times that the claims do get honored, and but we need to be careful about what is the claims being lodged. Because claims also bring in, there is other things also which is there. NCBs are there. That is no claim bonuses are also there. All those things you need to factor in, and then accordingly make a claim. And also one important aspect is that claims usually, the buyers usually do not raise disputes. The disputes are raised. You can understand the bigger companies, they do not really use disputes as a mechanism to avoid payments, because they need to ensure that their supply chains are working efficiently. In fact, many we have experienced in recent times in COVID situations where the buyers have extended advance payments to support these suppliers. These I'm talking about all the vintage relationships, not one-off trades which we are talking about, and between the reputed buyers as well. So they do not want to dispute frivolously. They ensure that the payments are there, payments are made on time, and claims are minimized, because it affects their credit rating. Imagine the Marks and Spencers creating a frivolous dispute and the claim gets raised. So when you do that, the credit insurance blocks the limits on the Marks and Spencers if you raise a claim. And that's how the banks also across the world who are extending credit to the Marks and Spencers possibly will freeze up their lines. So you need to understand a holistic perspective that it's not a small thing that anybody will raise a dispute or raise a frivolous claim or something like that. The other thing is that be open to the ideas of using factoring. We need to move as we mature in the market. We need to move outside the comfort zone of banking relationships and move to the new age mechanisms of factoring, supply chain finance, which is here to stay, which is taking shape across the world, which is gaining more and more traction across the world. And in India also, we are seeing that increased trade is happening. We are expecting huge amount of business now with China fall off across the world. There is expectation of more business in India as well. So more business means both business opportunities for the suppliers, which also means requirement of more credit. Are banks fully capacitized to pay this credit? I doubt. And till we evolve to the new mechanisms, plain working capital, which we were used to, is going to be a thing
Thank
of
you.
past.
So I think from this outcome of this entire session is that trade credit is insurance is must for the any businessman. This is a life of your insurance. Like you are doing your insurance of your life, you can do your business also. You are doing the insurance of your balance sheet. It's a must, and it's and the cost part, rightly said by the actuary, it you have to assume in your business as a risk part. And its claim part, and the Bilal has already said that claims are there, bound to be there, but using the technology, using the artificial intelligence, using the machine learning, it can be eliminated. And using the blockchain technology, it can be identified if the right kind of transactions are happening. You can eliminate the fraud and any malfunctions in the. So its technology can use in this entire insurance, in the time management, in the claim settlement, in the claim validity, in the insurance credit rating also, the how the clients are a good client in terms of the rating that the insurance company can decide. So insurance is one of the major aspects for any trade. Rightly said by the Raviji, $70 billion transaction still are happening without any finance, which can be financed by all of you. You need to ensure your trade in the insurance guard. So if you have your guarding your trade, complete trade in with your insurance, you will be protected. As you already know that Bilal has said, it's a force liability. Don't take it as force. It's a trade management part, as rightly said by the Raviji. You need to check This you are ensuring your transaction, ensuring your trade or trade credit also being for going to be benefit in the credit transaction. And lot of factoring company and lot of blockchain technology kind of company are entering into the market, and IRDA also coming the good way resolving the issue of the invoice factoring. A lot of things are in the pipeline. Future is good. Let's stay on and have used. So with this, I'm thankful to all my panelists over here, Raviji, Akshayji, Bilal, and Saurabh Swani. So thank you very much for your kind word and
Thank you, everyone.
Thank you very much.
Thank you, Dheeraj, for inviting us on this wonderful platform with having the audience. Right. Thank you very much.
Yeah, there will be I think media interaction also. I think I'll have to check. The interaction with the media are going to be there. I'll check. Otherwise, not then I'll call up for a second call for the media. They will have the interaction.
No issues, and if there are any queries specific to any of the
tomorrow evening media interaction is there. Tomorrow evening is media. So I'll invite you for tomorrow for media interaction.
No issue. Dheeraj, if there is any questions for any of the panelists, please collate and send us so that we can revert.
Sure. Sure.
Okay.
Thank you very much, sir. Thank you.
Thank you. Have a great evening.
Thank you.
Thank you.
Thank you.
Bye.